Hi, this is Steve. Welcome to the next edition of Highlights, our educational video newsletter with all the news in crude recently. I figured we'd look at the crude market and go over some candlestick and Western indicators. Again, one of the most beneficial uses of the candles is you give up absolutely nothing with a candlestick chart. We could add the analysis of classic Western charting techniques, moving averages, trend lines, and so forth. And one of those Western charting techniques that I really like is what I call change of polarity. And it's a very common use in classic Western technicals. I just came up with the term. So, change of polarity essentially means a multi-tested resistance area. If the market is solid, once the market breaks above it, old resistance should be new support. And with that in mind, let's look at crude. And at that bluish arrow, you could see that the market gapped higher. The Japanese, refresh your memory, the Japanese call rising gap or rising window. But more significantly than that gap, and I'm going to go over exactly why this area here around 84, 84 and 3/4 became support here. Uh, First of all, we have the rising window. Rising window becomes a support area. But getting back, oh, by the way, I wanted to show you this. This was a dark cloud cover. It's when a black candle gets deeply into the white candle during a rally, even a short-term rally like this. And so the dark cloud cover, notice how the dark cloud cover confirmed a resistance area. So let me show you that resistance area here. And by the way, the dark cloud cover, well, the market pulled back and got to the bottom, got to a support area. So this bearish signal hinted of a downtrend, and the market indeed did fall further and found support at the green horizontal line here around 78. But getting back to the resistance area here, this is change of polarity. Old resistance becomes new support. So we have this change of polarity around $84. We also have this rising window as a support area between 84 and let's say 84 and 3/4. And so right at that support area, we had a bullish engulfing pattern. But the main thrust of this is the power. We have a confluence of candles. We have that bullish engulfing pattern confirming the rising windows, but it's really more than that. It's this combination of Eastern and Western charting techniques. So the Western change of polarity becomes old support, becomes old resistance, becomes support, and the rising window. And this, by the way, is one of my favorite techniques because you have two reasons for support. You have the rising window and the change of polarity. Now, speaking of Western technicals, classic Western technical. By the way, there's a bullish engulfing pattern here down at the lows right around 78. If they're in classic Western technicals, you could have what's called a swing target. So essentially, crude has rallied from 78 to, and there's a continuation contract, by the way, from 78 to about 90. So you're looking at $12 before it had the correction. So you add $12 to the correction low. Let's round it off to about $85. So 12 added to 85 gives us a potential target all the way up to around $97. So, that's something to keep in mind. So, doesn't mean we're going to get there. It doesn't mean 97 is going to be a resistance area, but I just wanted to bring out how easy it is to add classic Western charting techniques like the swing target onto a candlestick chart. So, keep in mind the power of using your favorite Western charting techniques. I have my favorite Western tools with the insights of the candle. So, thanks, and hope you found this educational session informative, and may the candles continue lighting a path to greater profits.